just again, a reminder, this is for you so that you'll be able to learn what you want to learn when it comes to faster payments fraud, because today that is the topic of choice. We are going to be discussing faster payments fraud. I know some of you have attended the previous expert panel sessions we've had, and we've had the Fed and we've had the clearinghouse in previous sessions, but we got some new experts to actually come talk. We talked strategy before, we talked some of the things you need to do as far as preparing, and now it's really important that we hit one of those really hot topics, which is the fraud. We all know it doesn't matter what payment channel there is, there's going to be some fraud, and there are things that we need to know. Like, for example, what is the fraud? How can the fraud be limited? What are the monitoring requirements that are going to be in place? Dispute resolutions. I know that's a big deal to a lot of you who are out there in operations. So what we're going to do now is I'm going to give a chance for my panel experts to be able to introduce themselves. And then we're going to have us about an hour, up to an hour and a half at the most, discussion on what's happening in the world of faster payments fraud. So let's go ahead and start off with the way it appears on my screen, at least. Dan, I have you up in the top corner.
Dan Baum, I'm with the Federal Reserve and have the privilege of, for the last couple of years, working on the FedNow project and with responsibility for product. I come from a history of working in our ACH space. As I think most know now, we are starting a transition to more of a cross-service bent with the Federal Reserve. So under Mark Gould's leadership. So as we look at things like fraud, while I certainly have a heads-down view of the FedNow faster payments fraud, we're also looking at things like same-day ACH and other applications that will affect our other services. So we have an enterprise-wide fraud view in our organization. So that's me.
All right, thank you, Dan, and some cheers and applause there. Thank you for attending. We're looking forward to everything you have to say. Let's go ahead and go next with somebody who's got a hairstyle that looks even better than mine. Attila, I don't know how you got the wave to be so perfect, because it takes me a lot of work to get this to happen. Would you introduce yourself and let everybody know who you represent and the payment channels that you're most familiar with and working with, actually?
Yeah, sure. Thank you so much, and appreciate the hair comment. It just happens. I don't know what the the madness behind it. But hey, my name is Attila Chikmak. I am a senior product manager responsible for faster payments at City National Bank. I've been engaged in the faster payments landscape for over 5 years plus now. The predecessor of Zelle, and then RTP at a top 20 bank, and now RTP at a top 30 bank. So I launched RTP at other organizations. I launched Zelle at other organizations. Now I'm launching RTP at my current organization. And then very soon we're going to start working on Zelle disbursement models, including the Zelle over RTP interoperability, as soon as we can have resources allocated to that project. I'm not necessarily a fraud expert, but I've been spending a lot of time with this within this space, specifically within the instant space, instant payment ecosystem, because just like with legacies, it took us so much time to get to where we are, to understand how fraud happens, how can you avoid it with the legacy environment. Now we just have to do everything a lot faster, hence the punt with real-time payments and instant payments. Everybody has a lot more on their hands. We just have so much time that we have to do all we've done in the past in the longer period.
All right. Well, he may not, be humble and say he's not an expert, but he has really been out there working in the real world of what's happening in faster payments fraud, detecting and finding ways to be able to stop and mitigate it. So I'm going to say he's definitely an expert on this panel, because he's been educating the payments professor. Let's just say a lot of real world knowledge about to come there. And I sure you guys probably had some questions that came up just in his introduction like I did, and we'll get to those in a minute. Let's go ahead and move on to Abhishek. You're sitting over there beside Attila on my screen. Would you please introduce yourself and let us know where you fall in on faster payments?
Thanks, Kevin. I'm Abhishek Viraganta. I'm a Senior Vice President at VSoft, and my primary role at VSoft has been focusing on, one, actually getting VSoft's product Pigeon built, as well as making sure that we're able to successfully roll it out to market with the help of using rails such as FedNow and the clearinghouse's real-time payments. I fancy myself a technology expert, but I hope folks disagree with me. I'm excited to be a part of this panel. Thank you very much, Kevin.
Absolutely, Abhishek. We're definitely be glad to hear the software point of view of what can be done when it comes to fraud. But we're saving. I'm going to go with the best beard for last. There's some great looking beards on here, but you know that one's a little bit more fuller in there. You know, and I've known this one for a few years too. So really happy to bring Steve Ledford on. And Steve, would you let everybody know who you are and the faster payments that you actually represent as well?
Steve Ledford. I'm the product executive for the RTP network at the Clearinghouse and have been there since the very beginning. In fact, Attila was also there back when RTP was still just a bunch of PowerPoint. So, I'm the product lead for that. I'm also, by the way, on the board of the Faster Payments Council, and so also have a bit broader view through that. And very excited to be here today and talk about what we all can do to prevent fraud.
All right. Well, I've got my first question loaded up. Again, I'm going to remind you guys several times throughout the session. If you got questions you'd like to ask, you can put them in the Q&A or you can put them in the chat. And when you put them in the chat, you can send them either to the host and panelist or to everyone, whichever you want. But host and panelist is something that only we will see. And we'll definitely make sure that we address your questions. I think, in my opinion, the most important thing to get out is the myth. And the question that comes with that is, I hear all the time people say faster payments are going to mean faster fraud. Now, when you hear faster payments equals faster fraud, what is your reaction to that? How do you answer that when it comes up and people are like, I'm afraid of faster payments because it's going to equal faster fraud? So the question really is, do faster payments equal faster fraud? Let's go ahead and start off with Steve. Where would you be on that?
Well, actually, I think it's just not really looking at the right question. Faster payments do move faster. However, the actual perpetration of fraud is really, you still have to go through the same steps. You either have to get someone's credential and debit money from them, and you really can't do that with most real-time payment systems, which are credit push. So then you're looking at taking over someone's account, whether you dupe them into giving the login credentials, that type of thing, or somehow else. And that's not going to go any faster. In fact, if you think about credit transfers where you're going to be doing one account at a time versus some of the debit schemes where you can get a bunch of card numbers and just flood the system with them, you're actually probably a little bit slower on the initiation. Once you've successfully perpetrated the crime, I'm not accusing any of you of doing that, by the way, but once you've successfully perpetrated the crime, yes, you can move the money more quickly. And so you're really looking at a different part of it. But the key is making sure that folks can't perpetrate the crime in the first place. After that, the speed is really less relevant.
Okay, anybody else want to add to that? Does faster payments equal faster fraud?
All right, thanks, Kevin. I'd like to agree with Steve, and I'd also like to build on that a little bit. In fact, I think faster payments equals faster fraud detection. If you think about it, with a debit card type interface, you have the merchant acquirer go ahead and swipe the card. Transaction may be approved or declined at the point of sale, but it takes then an extended dispute process to retrieve those funds. On the other side of that, with a faster payment, if the transaction actually goes through, you can action upon it within the few seconds of that transaction actually going through. And I'm sure you're going to get to this later, but with various controls that software providers can put in place, you can even find the perpetrator of that fraud more quickly and more effectively than other slower payment channels.
All right, I'm going to say, guys, as far as the competition for quote of the session, Abhishek just took the lead right there with faster payments equals faster fraud detection. And you guys didn't know there was that competition taking place, so no pressure. But Abhishek, thank you for that. Attila, your thoughts now on faster payments equal and faster fraud.
Sure. So I'm going to try to break this down a little bit more from a bank's perspective, right? So this is where the potential fraud happens most of the time to begin with. We, as an organization, as a FI, as a credit union, regardless of your size, you need to understand the basics of fraud and instant payments specifically. Fraud is not new. I mean, fraud has been around with legacy payments for years and years, but it's very specific to instant payments to the point that it can be more dynamic and it rapidly changes. For whatever reason, the fraudsters are learning faster, but we have to keep up with them. As a bank, you need to start looking at your internal fraud management considerations on how do you evaluate when preparing for faster payments or instant payments, regardless if it's RTP or FedNow. You are looking at speed because the clearing and settlement, yes, it does occur immediately within 15 seconds. That minimizes your time as a bank to detect fraud and stop fraudulent payments from processing. And then the finality, Steve touched on that already, right? So once the transaction is gone, it's out the door. So as a bank, you have to have all your inline controls readily available for you. Really, you need to understand what can you do more than what a plug and play in fraud control can offer to you. And then we take that one step further. We are going away from the legacy mentality, 8 to 5 opening time frame. Everything is 24/7, 365. Anything that you implement and you add against instant payment has to behave in the same fashion. Fraud control doesn't stop. It has to continually progress within the bank. The bank has to learn from previous activities. You need to look at what went well with Zelle. How can you apply some of those controls that you did within the Zelle space to the RTP rail or to the FedNow rail? So as a bank, you constantly have to evolve and mature as the network is maturing and as fraud solutions out there maturing as well.
Okay, excellent. Well, Dan, we're going to let you come in and be the cleanup hitter on this one. When you hear faster payments equals faster fraud, what else would you want to add to that conversation?
Yeah, I think an important point that Attila just added is that the benefit and the detriment of it being a 24/7 always on kind of environment is that I think we'll see new attack vectors come up and partnership attack vectors, right? It's a way to clear the money faster from other fraud activity as well. So I think the financial institutions, the networks are all going to have to partner and sharpen the toolkits around the weekend behavior. It won't be the typical wait for a 3-day weekend and commit fraud on Friday afternoon, and then everyone's dark until Monday morning, kind of the old time fraud. It's going to be new over the weekends, and so I think we will see evolving patterns there that we're all going to have to sharpen up on. And Attila's point about watching what other networks like Zelle and RTP have experienced will be key for all of us, and then learning and quickly adapting.
All right, I'm giving you all extra points, or you and Attila extra points on let's learn from the legacy systems. And I love how nowadays legacy is suddenly becoming a bad word. Like everybody shivers a little bit when you say legacy systems because they're realizing there's no longer, hey, I'm just going to turn a blind eye or push it to the back burner. It's now becoming time. You got to do something about them systems. I would want to ask too, can we clarify for the audience when it comes to our credit push payment, our faster credit push payment, some things have already been mentioned, but really, where are the risks that are new or the risks that come along with a credit push payment that we've got to be aware of that maybe are different, that we aren't considering from taking from our previous payment systems? Because, for example, it's not a debit. And we've always put so many controls in place for our debits. Now it's a credit push. It's somebody authorizing it. So who would want to start off with when we look at a credit push system? What are the risks that we need to take in consideration? Raise your hand. Whoever raises a hand first gets this one.
I'll take it.
All right, Steve, it's yours.
First of all, what works in a debit environment where, I think, the whole idea that you have an authorization and then you have chances to challenge it later, those just aren't really what you need to do. You really have to focus on right at that point of entry. So, I like to say, what's the thing you need to do to prevent credit push fraud? Shut the front door. Make sure that the transactions never make it into the system. So it puts a lot of emphasis on that. What's new with faster payments is, I think, in the past, if you're going to do credit push payments, you could do a wire, but not many people had the ability to just initiate wires. You either had to call a branch. If you were a corporation, you had terminals to do it, but that was different. ACH credit transfers, again, that was typically more of a commercial kind of activity. We're now democratizing the ability to do credit push payments. And so where channels that maybe there wasn't much chance of someone initiating a fraudulent payment before, some of the online mobile banking, you now have that as a point of entry, whether it's through something like a Zelle or whether it's through something like RTP for A2A transfers. And so we need to make sure we're applying the kind of authentication of customers, not just authentication, but making sure they understand what they are doing when they initiate an irrevocable credit transfer. And you push that out, and you need to do it in a way you can't count on them doing it the way they do it with company payments. You need to come up with other tools that are more amenable to a retail type transaction. And folks are doing that, but don't skimp on that. Don't think that I don't need to worry about it, because you will then become the target of these new fraud vectors.
Okay, shut the front door. You just took the lead in the comment of the panel so far. I like that one. Shut the front door on them when it comes to the credit push payment. I know we've mentioned speed a lot of times too, that can be a risk that comes with it, as well as a benefit at the same time. Gentlemen, would you guys like to add anything else to the risks that are inherent within the credit push payment system?
So, Kevin, I'm going to try to bring this back into the bank's ecosystem, if you will, right? Or, organizations, we need to look at fraud related to instant payments differently. All right. So we cannot expect or assume that everything that's going to be the same is going to be the same for faster payments as it was with legacy payments. The nature of instant payments on its own, you need to take into consideration that 24/7 constantly on environment. Your front door needs to be better built. You need to have that multi-factor appropriate network standards, industry standards when it comes to MFA. As an organization, you need to be prepared for it. In both of my organization, I engaged both of organizations' fraud colleagues very early in the process as we were building the business case. We need to be aware of our own vulnerabilities. It doesn't sound good, but everybody knows that fraud happens regardless of the payment rail. The worst thing is that we can do is nothing. So education internally within the fraud risk officers, compliance officers, it's massive. It's a massive need that every bank that's going down the instant payment path, it has to address as early as possible, so you can answer appropriately the questions as they come up from these colleagues, right? Not everybody is going to have the solution for everything. We need to work on it, and you just need to get that comfort level that everybody has to have when it comes to instant payments.
Oh, gotta agree. Abhishek, please add to that.
Sure thing. Thanks, Kevin. So I completely agree with both Steve and Attila, right? I think the key is we have to look a little bit outside of payments to shutting the front door, right? That's probably the first real electronic systems that had the widespread consumer adoption that these instant payment systems will be very similar to email, right? You think about how we handled authentication around email, how we handled identity theft around email, how you actually are able to manage various users in an email system, authenticate their identities, and Attila's point, right, of consumer education, making sure that we're helping the end user understand what fraud on these types of platforms looks like. So if the front door is open to somebody that through any number of attack vectors, right? If the front door is opened, how do we then teach the consumer to shut it without inviting the person into their account? And that's very much like the Nigerian prince scams and those pieces that initially overtook email. But then rather than running the bank to send a wire with a photocopy of your passport, you're really going to be just making sure that you don't actually send the payment out, or you don't give your passwords out, or at a software level, at a system level, your system needs to be robust enough to either one, geolocate, two, if it crosses a certain transaction threshold, make sure that you're revalidating with the consumer that one, they are actually themselves. So whether through one-time password or a multi-factor piece, like Attila was saying, once we cross that transaction threshold, you need to reconfirm identity. Not so much that it causes user pain at the small dollar transactions, like $10 to Kevin for lunch isn't going to be impossible to solve, but something like now that both RTP and FedNow have their transaction limits creeping up, something like a real-time payment to a lawyer to an escrow account for home closing. That certainly needs to be solved for with a one-time password or re-authentication of the user at the time of transaction.
And if anybody wants to test the $10 to Kevin for lunch, go ahead and send it. I will be your guinea pig for that. All right. And I love the shut the better built front door there. I do want to give, and thank you, Steve. All right. I do want to give Dan opportunity. Anything you'd want to ask on risks that are inherent to credit push payments that we need to be aware of? Because we're definitely starting to lean over to the area of controls, and I'm definitely want to be able to talk about rules too, but I definitely want to give you a chance that if there's anything else you would add to that.
And hopefully, Kevin, I can give you a nice segue into the things you just mentioned. But I think that my colleagues have really put their thumbs on the pulse of this one. It boils down to if you're going to commit fraud, you want to look for the weak link in the entire chain of the value chain of creating a credit push payment. And often that's going to be the consumer, and it's the like the typical email frauds that we had, or the romance frauds, or the other dupe kind of fraud that happens outside of the banking system. Banks and networks work diligently, as Attila mentioned, to really bolster their systems. So perhaps it's the consumer that's the weak link here, if you will. And if so, I think we've got to commit some time and energy to understanding where we can't solve it all. We can educate, we can try to bolster that aspect, but then what do we do when we understand that they are going to be a weak link and things happen? How do we help them moving forward from that? I think is going to be the next step, because the fraud will happen, and it's likely going to happen there.
All right, you are the weakest link. Yeah, that's not going to be too well to be telling our consumers, but it is the truth. In fact, Dan, I'm going to go ahead and start with you on this one, because one of the next questions that comes up, and I mean constantly, that I'm hearing, I get it on YouTube, I get it in my email, I get it at conferences, which we know are taking place live again. And it is, okay, with these newer systems, with FedNow, the new system coming in, with RTP, a new payment channel, both of them new payment channels, even it comes up with Zelle. Well, what are the rules that are governing these payment channels? What are the rules that we've got to be aware of when it comes to the disputes that are happening, the protections that are going to be there, whether it's a consumer or it's a business? What are the I guess the industries that experts we got to be paying attention to, the regulators? I know that's like a Pandora's box of questions right in there, but what would you say when it comes to the rules governing the payment channel that everybody needs to be getting that education on and staying on top of and aware of? What would those be?
Yeah, I do think, thank you, and thank you for putting me first in order to handle this Pandora's box of questions. But I do think it's a critical part of this whole discussion, right? It's how are the end users going to interact with the various solutions that'll come out of instant and faster payments in a way that's going to add some confidence to the networks, right? That's the charge for all of us to manage to, and then how do we help them? I think the bottom line is, speaking for FedNow first, is that the base level rule set will be the operating rules of the network itself. So we will expose our operating rules, and through them, as typical with Fed rules, we will expose things like Reg J that will define our processing environment, but we'll also attach to other regulations that are in place. And in doing so, be as transparent as we can be to what users and then their account holders, so users being financial institutions and their account holders, can expect when they participate in the network. Now, that sounds a little bit vague, and maybe intentionally so, because I think just within the last couple of months, we've seen some comments from CFPB and others. I think there's an evolving review of rule sets and application of rule sets around these things as organizations like CFPB, maybe a little different and off of fraud, but compliance rule sets are going to start evolving as we begin to push on use cases and application of the evolving networks. So we in FedNow have a keen eye on how these are evolving and where we're going to land. I know that the folks, we certainly have talked to the folks at AWS. We talked to our colleagues at the clearinghouse. We know they've got their pulse on it as well. I think it's a interesting and evolving environment that we're all going to have to come up to speed with if we want to build that confidence that I started my answer with. So that's where I would start with that answer.
All right, I like that. Network rules, there are still regulations out there that we got to be aware of, and CFPB. If that doesn't make you shiver just a little bit, I got a feeling we'll hear a little bit more on that in the comments. If not, I got a few opinions on that one too. But Steve, since you do represent a payment channel as well, what is your answer on the rules that govern the payment channel and what people need to know as far as dispute resolutions and managing and monitoring of risk?
Oh, absolutely. Okay. Well, first of all, at a baseline, none of the existing rules or laws go away just because you're using a different payment mechanism. And so Regulation E, UCC 4A, they're still out there. In fact, one of the things that we do, and I know that the Federal Reserve is also doing that, is clarifying how those would apply in particular to the networks themselves. And EWS does that as well, for example. And so those are there. One thing that is different with a credit transfer is, if you think about the way you deal with disputes about a debit, there are multiple parties in the chain: the originator of the debit, the originator's bank, the payer's bank, and the payer. When it's a credit transfer, honestly, most of that's going to be between the originator and their financial institution. That's the one who is responsible for authenticating it. Yes, this is my customer, and yes, they did authorize this transfer. So you might not have as much inter-financial institution dispute mechanisms. We do have the ability for the paying institution in the RTP network to basically tell the other institution, yes, this was a fraudulent payment. Would you work with me to retrieve that? It's through a request return of process. It's the FRAD code. In fact, we require all fraudulent situations to be reported so we can track them, look for trends, and look for ways of mitigating. But again, in that case, it was really, in most cases, Reg E is going to be pretty clear on that. It's up to the paying institution to make sure that they're dealing with that situation with their customer. We have other things in the rules which are meant for the particular situation of an instant irrevocable transfer to help. Consumer payments, for example, the sending financial institution has to have some way of authentic or determining whether that, yes, this is going to the payee that the customer intended. There are also things that we've learned are fairly helpful, especially when maybe the payee is not, the payer is not exactly sure what they're doing. Things that you can do, prompts. Hey, are you sending this payment to someone you know? Account opening is a very important time when you add a new payee. Yes. Because if I'm a fraudster, I want to be the payee, and so there are those situations. So we also have rules around things like strong authentication. The other thing, request for payment. We haven't talked about that yet, but that's something that our system, FedNow, is planning to have. There are additional guarantees around that, because you don't want someone sending a request for payment where they're misrepresenting themselves or using it to perpetrate a fraud. And so there are claims that can be attached to that. And so there's a lot of different things. One thing though, and I think that, Dan, it was great you said, sometimes it might seem a little vague, but because of the multiple ways these payment systems can be used, you can't be too specific. A mechanism for preventing fraud that works for consumers is not going to work maybe for a large corporation, and even different ways of initiating payments. You could say we're always going to use Face ID, but how do you do that with an API on a large scale transfer? So you need to allow the right technology to be applied, and you need for it to be able to evolve as better capabilities come along.
All right. Wow. There's a lot in there. A lot in there. I love the FRAD code, though. I'm a fan of the FRAD code and the requirements that are there. Those of you who don't know what that just meant, if you're looking at RTP, it is something really important to know that is specific that they have built when it comes to fraud detection or what's happening in the monitoring across the network and what you've got to do when it takes place. But before we get there, Attila, you've dealt with the actual fraud taking place in your organization. And so when it comes to the rules and the regulations that you have to apply in the dispute process in dealing with the fraud, what would you tell people you need to be aware of as far as the rules and regulations that are out there?
So Steve kind of touched on those already, right? So that the most potentially complicated space or use case model is that consumer to consumer space, where anybody can claim that it's someone that they are not. But as a bank, right? So you need to be involved and informed with what the industry is doing in this space to be able to appropriately apply it on your retail side of the house versus on your commercial side of the house. Become part of a faster payments council if you can. CFPB, Steve brought it up. It's a great resource for anyone to learn more about this. The FedNow community, they are very aggressively engaging every type of customer, not just banks, but fintechs as well as other payment ecosystem coexistent entities, right? So you need to talk to your vendors. As a financial institution, you can build the controls that you think would work for you, but if the system that you're using is not able to appropriately implement it and appropriately run it, then you are just moving, you're going forward one step and backwards two steps. So there's a lot of these pieces of the puzzle that need to be in place for it to work appropriately. Account opening, Steve touched on that. Add suspicion accounts and aliases to watch list to block potential fraudulent transactions before the funds leave your institution, right? So what I meant before when I said you need to educate, you really need to go back and re-educate your fraud organization on how instant payments affect fraud. In addition to that, right? So there are, as with other payments, fraud prevention doesn't necessarily stay within the financial institution space. The very big, in my mind, one of the biggest positives that PCH brings to this real-time payment, faster payment, or instant payment space is that ability to collaborate amongst the banks when a fraud happens. So on the RTP rail, when a fraud happens, the banks are required to collaborate, work together, and investigate and resolve, and then learn from it for next time that same fraud would potentially not happen. On the top of all that, educating the consumer, the internal customer base, the external customer base as well. So all the normal social engineering scams that exist today for legacy payments, some apply to RTP and or potentially even FedNow, but you have to look at this holistically at an enterprise level. How can you really cover everything that happens on the retail side, and how can you really cover on what's happening on the commercial side as well?
All right, talk about the Pandora's box of fraud controls just got opened wide there. For those of you on the call that you don't know about the risk mitigation and fraud controls document and requirements on RTP, I highly recommend you go read through that, because you'll learn about the system and the participant notices and the difference between them and the monitoring that's taking place. That's what Attila was alluding to. That's also where I was making the joke on the FRAD code that's there and how you have to do the request for return of payment, and it's got to have that code and everything. It's got to be in place. But something else that came up a couple times was CFPB. Reg E does apply when a consumer is involved in these faster payment channels. And it was, if you haven't been following, Reg E or CFPB and Reg E put out an FAQ that deals directly with these faster payment channels. And if you are working with any of them, I would highly recommend you go read through that FAQ. I put out a series of videos on it because some of it was surprising, but they are basically saying, hey, financial institutions, it's your problem, not your consumers as much. So just be aware of that. Also want to mention too, we didn't say it explicitly, but UCC 4A will apply when a commercial representative is involved. So, and it will be, if in the case of RTP, the state of New York's version of UCC 4A. So just be aware of that as well. Something else that's new and coming from the industry is we just recently saw there was an update to the FFIEC guidelines and authentication, and MFA is something that's been mentioned a lot too. So Abhishek, I'd like to throw it over to you when it comes to these new rules, these new guidances that are out there too. How do you see that applying, especially things like the FFIEC guidance on authentication and as a software provider having the authentication levels and multi-factor authentication in place?
Thanks, Kevin. So I certainly won't be pretending to understand or know as much about the regulations as the gentleman who spoke before me. But to fundamentally believe that when we're looking at things like multi-factor authentication beyond the FFIEC guideline, right? For those who are transmitting instant payments, if their solution provider does not have similar controls in place as per the FFIEC guidelines, there should be, even beyond that, CFPB intervention in those kinds of situations, because you're simply not protecting the consumer when you don't have the IT security that needs to be there to protect those kinds of transactions. Now, as a step beyond that, I think Attila really started to unpack something pretty deep. I also believe that it really depends on use case, what types of frauds and what types of regs are going to apply. So while Regi may apply to all of these and UCC 4A when in a commercial setting, realistically, there's not going to be much scope for fraud, for example, in a use case like loan collections, where you are receiving only over the RTP network, or you are receiving only as a financial institution over FedNow. The goal would then become, I think in my mind, would be to focus on regulating the technology providers and regulating the technology solutions to make sure that, one, they're secure, two, they've been penetration tested regularly. And I believe that in the next couple of years, you really do need to develop the regulations out to encompass the level to which these are penetration tested and systems are security hardened. That I think will be the next step as we move past just the regulation around the payments, because there's only so much that Dan's and Steve's organizations can do, and there's only so much Attila's organizations can do when their software and technology providers aren't stepping up to make security a priority, especially when the attack vectors are going to be around the consumer, their education, and then secondarily the technology systems.
Okay, I like that. There is only so much you can do alone. You need to make sure you're working with your different partners. Now, I know one of the topics that we definitely got to get to as we're going along. And Attila, you got another comment there? Go ahead.
Yeah, I just want to kind of put a little closing on what Abhishek said, that as a FI, you need to work and you need to push your fintech. You need it's no longer that, oh, we'll tell them, they'll listen and they'll do it. They have to hear us. They have to understand why we are asking, because instant payments, whether that's RTP or FedNow, behaves differently. So that mentality that it's ingrained in our fraud control or DNA, if you will, it needs to be set aside, and you need to listen and hear what banks are asking for. But perfect touch on that, Abhishek, that you need to push your fintech, you need to work hand in hand with them so you can work together and mature to a place where you feel comfortable as a financial institution to open up your environment to RTP and FedNow and anything else that comes after that.
Okay, so Abhishek, it sounds like you're going to get pushed around a little bit as we move forward with the development of these products. Well, one thing I know people will be pushing for is what are the controls that are going to be in place? Now, when it comes to the different controls, we've got different levels represented here. So I'm going to start off with the payment channels as far as what are the controls that you know that you can put in place to help mitigate, limit the fraud, the reporting and the monitoring of the fraud too. Then I'm going to see what Attila's got to say. And finally, I'm going to see the different view that comes from the software provider of additional or controls they can put in place to be able to give us a really, since I mentioned the FFIEC guidance, layered controls, the main thing that they're looking for in there. And so let's go through the layers, and let's start off with Dan. What are you seeing when it comes to controls that in the FedNow system will be in place to help mitigate and limit the risk that are there, and hopefully prevent a lot of losses too?
Yeah, I think the idea with controls is to not to overuse the term, but to layer them, right? So you start with network level controls, things like value and usage controls at the network level that will just provide kind of the backdrop. And then you start to get lower and lower in the application of the controls. So the next would be to apply a FI level or a participant level control, such that maybe if our value limit is X dollars, they can do it X, divided by 2 or half of that, because they have a lower risk tolerance than perhaps the network level. So taking it down to the FI level, and then, at some point we're going to want to get to the account level. So if we've identified through fraud reporting that we've got a bad actor and they've been identified to the network and networks, if we're working collaboratively with our colleagues at the clearinghouse, we'd want to be able to have account level controls in place, such things like negative list that will allow for that. Those are all hard controls that you'd want to be able to make configurable and add in. I think the next level is to add some intelligence to that. And here we'd want to, and we are planning to, add things like velocity controls or historical value controls, the ability to use machine learning or artificial intelligence to detect anomalous behaviors, such that we can say the financial institutions in the network can control themselves by setting these configurable controls. But then we're going to add that extra layer that says, we've just detected something that's out of the norm. You've never had 1 million payments in 5 minutes. You just got 1 million payments. We've put the brakes on and identified that because it's anomalous. So I think it's this layered approach with the controls that allows for the belt and suspenders and to kind of triangulate around the potential for these attack vectors.
Triangulate around them. Wow. Okay, Dan, that was a loaded answer right there. I mean, we could probably have a session just on the different things, the intelligence, the machine learning. I love too the negative list. We might have to explain more on that as well. But I'm going to go ahead and pass it over to Steve. So Steve, when it comes to the controls, like we've already mentioned your risk mitigation and fraud controls that you've got, which is a whole document. I've done an entire class just on that document because there's so much in there. But what would you add to it as far as, hey, listeners, attendees, these are the things you need to be aware of as far as controls that if not just in the RTP network and faster payments overall?
I think one of the important things is analyzing and collaborating. I love what Attila said about folks coming together, because fraud so far has been at a very low level. It's a fraction of a percent. I mean, a fraction of a percent actually, but it's largely because the kinds of use cases are not the ones that are most susceptible to fraud. But what we do is when we get fraud reported, we take a look, we talk to the financial institutions involved to try to figure out what happened. Because if you have these defenses, but someone's getting through, what happened? The good news is that when you do that, very often they will have already realized where their weakness was, what that vector was that there was exploited, and they start working on it. And then you can share those learnings to others. By the way, if you're thinking about setting up your authentication this way, here's a weak spot. And folks are willing to do that because nobody wins when there's fraud. By the way, I like what I think it was, I can't remember if it was Attila or Dan saying that, you got to be ready for these kind of things 24/7. And that's true. I mean, if you're anti-fraud folks, hopefully, are going home at 5 o'clock, the bad guys aren't. They're going to work through the weekend. They've got a reason to. And so, and a lot of times it's that immediate response, assess the situation and do something, and really providing a way of having that information flow. The human aspect of it, you can't take it out of it, because at the end, fraudsters are human beings. And so understanding what they're doing, how they're doing, their psychology will help as we continue to improve our defenses.
All right. I like that. Stop, collaborate, and analyze. I mean, that is going to be some important stuff to have there. And okay, Attila, we've heard from the networks what they've got, what they're doing, and what they put in place. What about you, as you're going live with these systems in your institution? What are the controls you like to have that you actually see benefit from, that you would recommend to others as they're looking to going live with systems as well?
Sure. So I'm going to break it down on the consumer and then try to break it down for the business side. So on the consumer side, we're going to have to continue the education process, right? So providing specific content that talks about never respond to suspicious emails, don't open attachments, don't click on a link just because somebody told you to click on a link. If you don't know who the email came from, or the text message for all that matter too, you don't recognize it, you don't touch it, delete it. If somebody really wants to get a hold of you, they will get a hold of you, and they have other means, right? Adopt a zero trust contact policy. I look at it and I'm embedding this mentality with my kids too, because everybody has a mobile phone. We have a smartphone in our hands, and they move so fast in between systems that fraud can happen at any given time. And I keep telling them, you don't know someone that's reaching out to you, don't respond back to that person or that individual user. Use strong and unique passwords. That seems to be a repetitive comment that you hear a lot, but you have to continue to follow that model. Allow and enable alerts for any type of transaction from your accounts to continue to flow to you. Actually, I would say the more information you have coming at you, the better are you. It puts you in a position to make a decision or yes or no something. Everything is a 0 or a 1, right? So you just have to have the right information set to be able to select 1 or 0. On the business side, it's going to come down to this too. Again, training internally, training externally, customers and colleagues to verify who the source is. You want to make sure that the supplier or that biller that's sending you a request for payment is who they say that they are, right? So don't accept a request for payment and that comes under the pretext of RFP in your text message. If it's not coming from a RTP TCH-based environment from a bank, nobody's going to send you that type of message. So you need to be aware of what's happening with that space. Implement dual payment approvals. It doesn't matter that the legacy payment ecosystem overuse that model. You have to apply to instant payments too. On the top of MFA, I almost go to the point that once I authenticated the client into my treasury portal before they submit a real-time payment, I'm going to force them to authenticate themselves again via a different channel that they authenticated as they log into the portal. So you're adding multiple controls, multiple layers that you are potentially going to be able to weed out the fraudster as he or she is trying to penetrate your environment as a bank.
Okay, I want to just really quickly make sure everybody heard right there. When you talked about implementing dual controls, the question comes up right away, can we do that with faster payments? I mean, they move so quickly. And the reality is, yes, you can, because you're doing the dual control before it gets into the payment network. And since it's before it gets in the payment network, the clock hasn't started. The other thing is, too, folks, I hope you caught this. He said the dual control is over a different payment channel that we would hope, at least, the fraudsters wouldn't be aware of, wouldn't be able to see, and therefore put that extra layer, a way higher layer of security in place for that authentication method. And, we've talked a lot of controls of what's in the network. We talked controls of what is actually happening at a provider. I love the zero trust policy too. That's made my list of hit words here. Abhishek, what about on your side when it comes to risk controls? You know what's in place for the channels and what they require. Are there other things that as a software provider you're doing and can put in place to help further limit the risk or control and monitor the risk for end users, for financial institutions, businesses, and consumers?
First, I do want to hit on the fact that Attila has basically, through zero trust in his policy with his kids, has basically created stranger danger for the 21st century for Gen Z. So, thanks, Attila. I'm gonna be repurposing that. I think from a technology provider perspective, from a solution provider perspective, it becomes very, very important to put basic controls in place, right? I think there's a couple key things. At first being, we talked a lot about dollar value limits, not only at the FI level, but also at the end user level. Kevin knows I'm not very trustworthy, so my financial institution may decide that they want to put me on a lower dollar value limit than some of my peers. But even beyond that, maybe velocity limits. Just because the payments themselves are faster, that doesn't mean you should be sending multiple payments faster in a few seconds, right? And that could be a signal for fraud. That could be an indication that there's a bad actor sending funds out to multiple shell accounts to then consolidate at a future point. Now, beyond the actual limits and beyond the actual authentication component that Attila talked about at length, I think there's two other components that become very critical as we start to go forward on these faster and real-time payments. I initially, at the start of this webinar, I said faster payments doesn't necessarily mean faster fraud. In fact, it could mean faster detection. So when we're looking at something like that, the goal first needs to be, we need to be able to track where each payment is coming from. So firstly, you look at geofencing the actual transaction. So if, for example, this end user is based in Florida, but then they've started trying to run transactions out of Sochi or so anywhere else in the world, Iran, it doesn't matter. You start to see that shouldn't be allowed to happen on the system. Mm-hmm. Now you may have a bank. See, we're dealing with predominantly domestic rails. RTP doesn't allow you to send internationally today. FedNow doesn't allow you to send internationally today. You can only send a US-based accounts. So when you're looking at a system like that, the goal should be that unless the financial institution explicitly says, please allow me, I have a large customer base of non-resident aliens that are based in Venezuela. Can you please enable transactions out of Venezuela, as an example? Then you should be able to do that. But on the other side of that, there should be a red list that we shouldn't allow transactions out of as a baseline unless the financial institution would like that. Or if they're a very, very focused, as an example, a single seg credit union, small single branch, 400 members, they know may not leave Illinois or wherever it is their membership is. The goal should then become, all right, let's make sure that unless they give us a travel notice, unless they say, Mr. Credit Union, I'm going to be traveling outside of the state of Illinois. Can you please make sure I'm able to transact outside of that? Then like a travel notice on a credit card, as an example, you'd be able to then transact outside of Illinois for that specific account for that specific member. Last component of that, I think, kind of feeds off the geolocation, and that really is card networks have turned it into a science. That means that we as solution providers, to Dan's point, Dan really did speak about this well and extensively, we have to implement behavioral and AI components to make sure that we understand the account holder's overall experience, we understand the account holder's overall behavior, to know that Abhishek lives in Atlanta, there's no reason why he'd be putting $1,000 on his card in New York. And if he is putting $1,000 on his through RTP in New York, he can go ahead and regenerate that payment. Or why is he paying somebody in Canada when traditionally he's only sourced domestic payments under the value of $250? Those are the kinds of smart, easy system components that we can easily put into place and exist across all of our other platforms. That we just have to carry forward the real-time payments, even though they're newer products, even though they may slightly extend our runway to market, that they will greatly decrease financial institution pain.
All right, well said. And one of the things I got out of there is, it's like the Buzz Lightyear of payments. Buzz Lightyear was to infinity and beyond, and we're to MFA and beyond, because MFA alone is not enough, and we need to go beyond that. Because I know one of the things that is important is going to be resources, and what resources are available to people to learn more, to learn what's happening in the world of fraud, to learn what they can be doing, to learn how they can, just like FedNow, how it's progressing and developing. I know I got today about an email about a town hall coming up for FedNow to be able to go and learn more. So my last question is going to be directed towards what are the resources that are out there. Let's start off with Dan. Dan, what are the resources to learn more about the risk and the fraud controls and FedNow overall that are out there and available? Because I know you guys got a lot really that's out there. What would you tell the attendees? Go here and you'll be able to stay on top of it and learn even more.
This is going to sound a little bit like a paid commercial for the work that's going on. The Secure Payments Task Force has done a lot on the classification of fraud and trying to build a standard structure upon which we can all base our fraud reporting and communication. So the kind of working together model that a couple of us have talked about. And then you mentioned the town hall. The FedNow community is going to quickly become a great resource for fraud. I know we're heads down on the next wave of fraud materials that we plan to fraud prevention. Steve made a good point earlier. The fraud prevention materials that we hope to be publishing, and we'll be sharing those with the community. This isn't FedNow marketing material. This will be general best practices that we've envisioned that we hope to be able to publish.
All right, again, excellent resources. I got to say, I pay attention to what's happening in the FedNow community. There's regular stuff coming out there. I know that there's some fraud work being done from the Fed separate from FedNow too, been paying attention to, so really good stuff. What about you, Steve? Because I know you've been involved in some even international type projects that are out there.
Yes. Yeah. Well, first of all, you know anything about our network, we have documents at theclearinghouse.org. If you go to the RTP tab, we have a document library, has some of the things, in fact, Kevin, you were talking about. By the way, I'm a big fan of the Payments Professor videos. You've done some good work, and so I'm going to definitely put a plug in there. Attila mentioned the Faster Payments Council. They had a whole work stream looking at fraud, a lot of good, I would say it's like FAQs and checklists and things like that to make sure that you're looking at the issue comprehensively. And the international thing you mentioned, the P20 group, Payments 20, actually issued a paper about 6 months ago, I guess it was, looking at ways that you can help prevent scams. And one of the things that it really goes with that whole layered approach.
It is a great paper. I've read it myself. Again, though, we also have FedNow. We have the Faster Payments Council that was recommended. So Attila Abhishek, I mean, that's almost, what would you add? Could you add anything to that? All those different practices. I mean, also mentioned, of course, the CFPB FAQ, also mentioned the FFIEC updated authentication guidelines, all of that stuff. I mean, a lot to be able to keep up with.
Steve really stole mine. I was just going to plug the Payments Professor. As you kind of go through and make technology decisions, please keep VSoft in mind. Shameless plug, not even at all shameful. But thank you, Steve, for stealing my Payments Professor comment.
Anytime.
Okay. Well, attendees, here's the thing I want to do for you guys. I want to ask you guys, what do you think was, first of all, any questions you got, you can put them in the Q&A or the chat. While you're thinking of those questions, what would you say was the comment of the panel here? I mean, we started off with faster payments equal faster fraud detection. Love that one. Shut the front door. But then it grew into shut the better built front door. Love that one too. I don't know how many times I heard education, 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 education. We can't stress enough how important education is. We also had the you, customer that is, are the weakest link. A couple other ones that really caught my attention too is you need to work to push your fintech around. I mean, push your fintech to do the things that you need them to do. And huge one that, I mean, wow, unpacking this just one comment is a whole session or two in itself. Intelligence added, velocity controls, historical value controls, machine learning, artificial intelligence, real-time instant detection. Dan, I don't know how you said that all in one breath. That was impressive. And then we analyze and collaborate. Zero trust policy is the new stranger danger of this century. That one was huge too. But I mean, right there at the end, laminating the fraud classifier. Folks, what would you say was the comment of the session there? And are there any other questions that you would have for our panelists before we, well, some of us go to lunch? We got a quiet group today, and as what I've learned is that means we must have answered all their questions. So it looks like we're going to be able to cut out here a little bit early today. I do want to thank you guys so much. I know you've got Attila and Steve. For those of you who don't know, they're actually at the AFP conference. Dan is on his way to the AFP conference to be able to enlighten everybody on what's happening with FedNow. And I really do greatly appreciate all of you taking the time to be able to participate in this panel today. I'm looking forward to seeing how we can stop and limit fraud and what controls can be in place as we move forward in this new world of faster payments. So with that, I guess that's time to say, class dismissed.